All right, so things look pretty good for gold and silver today. And yesterday I said that the trend was going to be our friend moving forward, especially after such a huge downtrend for gold and silver prices and for some large indexes such as the NASDAQ and various stocks here and there. But things are starting to make a turn here after we hit an inflection point specifically for gold, when we hit this trading range here and we hit the bottom around 1680, now we're starting to see a little bit of a rise here. We're going steadily back up into the 1700s. And I want to show you guys something that I think it will be beneficial for us who are more longer term holders of gold specifically. We could possibly talk about silver in another video and do something similar here. But what I'm going to do and use as a proxy is the GLD here. I'm going to use GLD for a specific reason. You'll see why as a proxy for the gold spot price. But as you see here, the DXY is actually starting to trend down a little bit more so now. Yesterday it was trending down into the low 92s. Now we're starting to hit the 91 levels. And I expect it to continue trending downward as we start to see the VIX trend downward. Now, I've used this terminology here, and I may actually stop using this terminology because it can be somewhat misleading. But the VIX is usually known as the fear index. And here, as you can see on this chart, the VIX is starting to trend back down. We're at the 22 level now for the VIX. And yes, we did have fear, but usually there's fear for the longer term holders. For short term traders who are on either side of the fence, whether they are going to be shorting or going long on very short time intervals when the VIX is high, these guys are happy. And that is a very important distinction to make because what we saw over the course of the last, let's say, couple of weeks was advantageous for those who were wanting to, for example, short GLD or short SLV and what have you, or those who wanted to short tech stocks and get in and get out because volatility was very, very high. That means they could reap more reward from doing these intraday plays than they would if the VIX were down, as it's heading down now. So that's important to know because as we start to see the VIX head down, those opportunities or the large, um, I should say, the large amounts of award or reward that they would receive for doing these intraday plays have diminished because the VIX is down. It's the volatility index, not necessarily the, oh man, let's just sell everything index. So because of that, the DXY is starting to come down because what happens is people buy and sell on shorter time intervals. So cash is needed in order to do this. So why do I think that in the future, or I should say in the next 30 days, GLD as a proxy for gold will have less volatility and hopefully bounce back up? Well, it's because of this. We are on the CBOE website here, and we are looking at call options. Now, currently, GLD is at 160.84. And what I'm going to be looking for is implied volatility. So that's a volatility for April. For the next, let's give or take 30 days on an annualized basis, I want to look at the implied volatility at the strike price that has the most open interest and volume. So for GLD, that would be Friday, April 16th. This contract here at 160 has interest of 3,411, has volume of 1,381. The implied volatility is 0.17. If we go back to where we are in March. Currently at the strike price that's closest to us, volatility is higher. And as you can see, it begins to trend down as we get into April, which is a good sign, which lets you know that volatility is slowly coming back down to earth. Now, this is a very quick and dirty way of kind of gauging this. You can, create other formulas. You can create your own volatility index for gold specifically if you want to by doing some very complicated things. But this is a nice, quick way to eyeball whether or not things are going to become more advantageous for short-term traders who may either short or go long. It could be either or in a particular asset. We're looking at gold right now, or GLD. Or would it be more advantageous to just hold? So right now, I think for us who are long-term holders of gold and silver, we can do this again for silver. It would be more advantageous for us to just hold. And I'm specifically talking about myself here. This is not investment advice. Please don't listen to me when it comes to your investment strategies. I'm just telling you what I'm doing. I'm not selling anything. I'm just holding on to gold. I wasn't selling anything before. I'm just holding on. And as volatility decreases, we will start to see less of a bloodbath in gold. That doesn't mean that trend won't actually go down even more, but it won't go down so significantly. Or it doesn't mean, or it could mean that the price could go up, but it may not go up as significantly because volatility has decreased for those short-term trade opportunities. So guys, let me know what you think about this in the comment section below. I know it was somewhat complicated. I didn't want to go too much into it, but as far as the short-term opportunities for traders who were, likely shorting GLD, I think the magnitude of reward that they received in prior weeks, they won't receive in the weeks to come, which is good for us. Now, that could just mean we could be on a slower decline down as opposed to a rapid decline down. But guys, let me know what you think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.